This is our Forex blog for July 24th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. Our sortable currency meter lets you bring up a quote sheet in real time and sort it by whatever time frame you want. I like to sort it by hourly trends. And you can see the yen, the dollar, or the pound have the strongest hourly trends, and the euro, Australia, and New Zealand are the weakest. So step one of our three-step easy Forex trading system is simply look for buys in the strongest ones versus the weakest. We have the real-time trend on the top that's made up of 5 of our best statistical tools. 3 of them measure the direction, 2 of them measure the intensity of the direction, and we average it together to give you one indicator reading. Underneath that's a 15-minute trend, hourly, daily, weekly, monthly. Sometimes, like in the yen, all the time frames are in the same direction. That's as easy trading as you're going to get. You can see the New Zealand pretty much weak on all time frames from 10 o'clock except for the monthly. And the monthly can take 5 to 10 trading days to switch, trend direction. If it's up super strong and all of a sudden the real-time trend shifts down, it's going to be the last trend time frame to switch. So for the most part, you really want to watch the real-time trend. 15-minute, hourly, and daily helps. Weekly is very important as well. The monthly I don't care about personally at all. I rarely use it. If I have one that's strong on all time frames and another one's weak on all time frames, sometimes under certain circumstances I'll trade bigger lot sizes. But other than that, I don't even use it. So from 10 o'clock on, it's pretty clear. Step one, you want to look for sells in the New Zealand yen. So you bring up the New Zealand yen chart, and there's a lot of different ways of trading this. This one's above the hourly right here, and it goes from above the hourly to below it. That's oftentimes, the beginning of a new trend. You can see right here, it only went down 10 pips. Right here, went down 15 pips. Right here, went down 10, 20, 30, 40, 50 pips. When currencies break from below to above the hourly or from above to below, it tends to lead to a trend change. Another thing you can do is use, and this particular version of our software has been running all week. We have just recently put this in the software. We're using very fast digital signal processing techniques to come up with a much faster and smoother moving, for lack of a better term, moving average. Let me just show what this looks like. And let's say you put a 20-period digital signal processing tool on the chart. If price is underneath there and breaks underneath the hourly, it's a really good filter for letting you know when to trade on the downside. This is an extremely fast trend tool. You can see it found the new uptrend right here, went up, went down, some moves. The majority of the time, markets kind of go sideways, up, down, they're in a cycle, and then they begin a new trend. It's pretty obvious that you have the 50-day moving average right here, the monthly pivot, which is the average of last month. You can see the weekly and monthly trends down. The higher odds move, when you're looking at all these stats, is in a down move. It went up, came down, went up, didn't make a higher high than here, wasn't able even to get back to the high, came down, made slightly lower low, but that's not a significant enough of one, went up again, and again failed to go above this high significantly, maybe 2 or 3 pips above it, and then also did not go back up to the high here. So, when the market has had so many hours to try to go higher and it can't, and the longer term trend is down, for the most part the daily, weekly, monthly trend is down from about 6 o'clock onward, it's pretty much a no-brainer which direction it's going to go, and of course it does. If you also notice, the down moves during the day have statistically more weakness than the up moves. And once this trend really starts getting weak right here, you can see it pretty much stayed for the most part weak, bar for bar, until about 12:30. And our lower containment bands tend to contain price. You can see late last night, actually this is 9 o'clock yesterday, the market bounced off of there. So step one, use the currency meter. Step two, look for chart patterns, our new digital signal processing technique, which probably is going to be released in 2 days. I would say Thursday afternoon at the latest. Let's look at some of the other ones. Weak Swiss, another one that was strong today was the dollar. So since we just did the New Zealand, let me show the New Zealand dollar as well. And you got a nice sell signal from our FX trade signals. I'm going to put the digital signal processing on here too, just so you can get a feel for this too. It's going to be incorporated into our signals in the future. I haven't worked on these for probably about 2 weeks because I'm working on much faster signal identification. You can see our 15-minute trend and hourly trend shifted down right here and right here. Right, that's a significant distance away from the high. Because our digital signal processing technology is so fast, let me just add a 20-period moving average on here so you can see. And with moving averages, you have simple moving averages, which are slow, and then you have exponential moving averages, which are faster than simple moving averages. And then you have digital signal processing techniques, which measure the rate of change and momentum of the market and adjust themselves appropriately. And just to give you an idea, you can see that, you know, it's significantly faster. You know, it looks for buys right here versus right here, and obviously in this case, so this is just an illustrative purpose of, you know, the route we're going. When new trends begin, we want to get into those new trends earlier rather than later. And the difference might sometimes only be 3 to 5 pips. In some cases, you know, 8 to 15 pips. But let's say the trend doesn't work and the market changes direction and it only goes up 5 pips. Well, if you're in 5 pips earlier, then you have the chance to make 10 pips. You're certainly going to break even on the trade rather than lose, and you might even catch 4 to 6 pips on that, you know, if you notice the real-time trend. And so a lot of our statistical tools are going to be improved and, you know, drastically shifted over to the left. In other words, this gets a lot of the lag out of using statistics. And you will see the difference over the next, you know, 1 to 3 months in all of our statistical tools that use these technologies. So getting back to this, you have a strong dollar also, like you saw the New Zealand dollar fell. The pound was weak today, the Swiss was weak. We'll look at selling the dollar Swiss, buying the dollar Swiss, strong dollar, weak Swiss. Also notice above the hourly right here. And anytime you have a nice move up, and most of the trends up, the 15 hourly, daily, weekly, monthlies up for the majority part of the day. This is a wonderful place where using that new digital signal processing is going to help you. And in fact, let me just show you on a new chart what it will look like and how you will add it to your chart. Oops, I'm sorry here. This is, I like to, in our Forex blogs, show new features that are coming out, so as people get them, a lot of times the first time, and sometimes for a week or two when I show new tools, traders don't even have access to them. But it's better to show people over and over how to use a tool so that when they get it, they actually know what the heck to do with it, rather than waiting a few weeks more and watching futuristic, you know, blog videos. So if you go to sorry, put the wrong thing on here, moving average, you can see there's a new option here called DSP. And again, this, you know, allows you, let's say for a 20-period moving average, I want to have the DSP one be thicker, puts a 20-period digital signal processing, for lack of a better term, moving average on your chart. And we will put a simple one on there and an exponential too, just so you can see how much faster it is. All right. So now we have the DSP one, the exponential, and, you know, the simple. And you can see it, you know, especially after big moves, it radically is much faster than the other ones. A lot of times at the low here, you have 52 versus 59, 7 pips quicker in terms of getting into trends. Also note, you do have one false move underneath it briefly, but the second time down underneath there, you start to trend here. And a lot of our tools are using simple moving average for statistics, not our intensity tools, but the ones that measure trend direction. And you can see right here, the moving average is 97, and up here it's 05. It's 8 full pips earlier into this downtrend, which means basically you could have made a decent amount of money on this first entry, and if you had looked to get into here, it's already moved more than half the distance. You know, if you capture a portion of every swing, the difference from here to here, let's say you get half of that, you have a chance to make money on that. On here, if you got half of the move, you're basically making 1/3 less on that first wave of a new trend. And you know, again, it's much quicker at getting into new trends, and especially on longer term charts can be significant. Here's a 60-minute chart showing the 3 different moving averages. Notice it goes above this one right here at around 09, and the other one's up here at 35. That's 25 pips distance on a longer term trend when it starts showing a trend direction. And that can make a huge difference. I myself would love to have an extra 5 to 15 pips a day, and I believe that this technology is going to help people do that. It's also going to dramatically improve our scalping tools. So getting back to the Swiss, and I'll end today's blog with this. We'll put on a 20-period moving average of the digital signal processing kind, and on pullbacks to the hourly moving average. This is frequently a place where the market reverses, but it doesn't always. It's close enough to avoid whipsaws most of the time. If you got into a trade here, guess what? The market went up about 7 or 8 pips, more than enough to move your stop up. Maybe you lost 3 or 4 pips here. Maybe you made a pip or 2 or broke even. The second trade took off, and you know that one ran.